Hello everyone and welcome back. In lesson 1, we looked at what accounting means and why accounting exists. In this lesson, we are going to answer one important question. Who uses accounting information? Before we list the users, we need to understand one key word, stakeholder. A stakeholder is any person, group or organization that has an interest in a business or is affected by the decisions and performance of that business. So, when we talk about users of financial information, we are talking about stakeholders who use accounting information to make better informed decisions. Simple example. Let us use a simple example, Darwin Waterfront Cafe. The cafe receives money from customers, pays wages to employees, buys food and drinks, pays rent, and may need to buy equipment. Many different people may be interested in this business, but they will not all be interested for the same reason. The owner will not look at the information in the same way as the bank. The supplier will not need the information for the same reason as the government. That is why accounting information must be clear, useful, and reliable. Internal users. Let's begin with internal users. Internal users are users inside the business. The owner is one important internal user. The owner wants to know whether the business is doing well, whether it is making enough profit, and whether it can keep operating successfully. Managers are also internal users. A manager may use accounting information to make daily decisions, such as how much stock to buy, whether staffing costs are too high, or whether prices need to be reviewed. Employees are also interested in accounting information. They may want to know whether the business is stable, growing, and able to continue providing employment. There is one important note about employees. Employees are often considered internal stakeholders because they work within the business. However, employees and trade unions may also use published financial information like external users, especially when thinking about job security, wages, retirement benefits, and business stability. So the main idea is this. Employees are stakeholders because the financial health of the business affects them directly. Overall, internal users mainly use accounting information to manage the business, improve performance, and make better informed decisions. External users. Now let's move to external users. External users are people or groups outside the business who still need financial information. Banks and lenders may use accounting information before deciding whether to lend money to a business. They want to know whether the business can repay the loan. For example, if Darwin Waterfront Cafe needs finance to buy equipment, bank would ask for accounting information from the owner or manager before making a lending decision. Suppliers may also be interested. If a supplier allows the cafe to buy goods now and pay later, the supplier wants confidence that the business can repay its bills within the agreed credit terms. The government uses accounting information for reasons such as tax, compliance, and regulation. Investors or potential buyers may use accounting information to decide whether the business is worth investing in or buying. Customers and the wider community may also have an interest in some situations, especially if the business is important to the local area or has public responsibilities. For example, if Darwin Waterfront Cafe supports local sporting events or community activities, customers may be more willing to support the cafe because they know the business contributes to the local community. External users usually do not manage the daily operations of the business, but they still need financial information to make decisions about their relationship with the business. Different users, different decisions. Now let's pause and compare the different users. The owner may ask, are we making a profit? The manager may ask, are we using our resources wisely? The bank may ask, can this business repay a loan? The supplier may ask, can this business pay on time? The government may ask, has the business reported correctly? The employee may ask, is the business financially stable? The customer may ask, is this a business I trust and want to support? The same accounting information can therefore be useful to different people in different ways. How it links to accountability. Next, we need to connect stakeholders with accountability. Accounting information is not only about making decisions, it's about accountability. Accountability means being responsible for how money and resources are used. When a business keeps proper accounting records and prepares useful information, it becomes easier to explain what has happened, how resources were used, and why decisions were made. This is one reason accounting is sometimes called the language of business. It helps communicate the financial story of the business to the people who need to understand it. And to close, users of financial information are the people and groups who use accounting information to make decisions. Some users are internal, such as owners, managers, and employees. Some users are external, such as banks, suppliers, government, investors, customers, and the wider community. Employees can be a special case because they work inside the business, but they may also use published financial information in a way similar to external users. Each user may need the information for a different reason, but the main purpose is the same: to understand the business and make better informed decisions. In the next lesson, we will move on to ownership structures and look at different ways a business can be owned. Thank you for watching.